The consumer goods giant was able to offset the impact of rising inflation by passing along higher prices to consumers. Joining us now is Procter Gamble CEO Jon Moeller. Jon, nice to see you from Cincinnati.
Likewise, Sarah.
So how should we think about that 10% jump in organic revenue growth? Because a lot of it was higher pricing. What does it say about what you're seeing from the consumer?
Actually, I'd start with very strong volumes. Volumes up 3%, volume growth in almost every category. And then you're right, pricing added on top of that, and so did mix as consumers continue to trade up within our product categories. A couple other characteristics of that 10% that I think are important to share. Every category grew sales. Our personal health care business up over 30%, our laundry business up in the low teens, baby care, feminine protection, up double digits, on and on. Same thing geographically. So our focus markets grew 9%, our enterprise markets grew 12%. So the growth is very broad-based, and it's predicated on a very nice mix of volume, price, and mix.
Do you continue to see that kind of consumer strength going forward? Because there are growing concerns about a slowdown. So as inflation keeps setting in, how do you see the consumer responding?
We'll have to see how that goes. We're keeping our eye on that very carefully. But to date, you can look at a couple of pieces of data to see if there are indications of consumer trade down in the market today, and so far we're not seeing it. So if you look at private label market shares as a proxy of trade down, in the U.S., they're down past 3, 6, and 12 months. If we look at them in Europe, they're down past 3, 6, and 12 months. If we look at channel data and look at channels where budget-constrained consumers would be most likely to shop, our share growth in those channels, take the dollar channel as an example, are some of the highest across channels. So you're absolutely right to raise the forward-looking question. I don't have a crystal ball. We're watching that very carefully. But so far, we're in a very good place. The other thing is that we're ensuring that we take the kinds of actions that won't immunize us from significant consumer pressure, but will certainly help. For example, being more proactive in communicating the mileage that our brands provide, so that the entire value is framed in a way that's not just price per bottle.
Yeah, innovation too, I would think helps. So do you have more room, Jon, to keep raising prices? Is that part of the plan for consumers?
It's part of our business model, again, coupled with innovation so that value improves every step of the way. If you look at pricing as a component of our top line, it's been neutral to positive, mostly positive, for 43 out of the last 46 quarters, 16 out of the last 17 years. So at a fundamental level, it's part of what we do. And then really the question, you mentioned it, is can we continue to innovate in a way that allows that value accretion to continue? And I'm very hopeful we can.
What about the margin story, Jon? Clearly, the cost pressures are intense right now. Transportation, supply chain, commodities. How long do you think it takes to fix some of these big issues where it's not weighing on profitability so much? Because it looks like you revised forecasts for those costs to continue to climb.
We did. Those costs, if you look at commodities, transportation, and you throw in foreign exchange, that impact is about $3.2 billion after tax this year over last. So it's significant. As you've seen, we've been able to offset that through both continued investment in the top line as well as our strong productivity program. So we grew earnings per share 6%, 10% on a constant currency basis, and we'll have to keep at that.
Yeah, 4x. You were CFO before CEO for a long time. We're starting to see some extreme moves, especially in the dollar against the Japanese yen, which is at like a 20-year low. How much is this impacting your business? And do you think broader multinational earnings in this country relative to other periods where we've seen this thing happen?
It's significant. There's no way around it.